Good morning. Welcome to Stock Market Today. It's Thursday, February 14th, 2019, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can follow me on Twitter. I'm at Dan Russo _ CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. And if you head over to chaikinanalytics.com/today, you can sign up for a free email. You'll follow along with this show as well as get daily stock ideas to consider in your inbox every morning before the market opens. So U.S. equities were higher on Wednesday, with the S&P 500 closing off its best levels, but above the 200-day moving average. Treasuries were weaker, with the curve flattening. The dollar was stronger on the major crosses. Gold finished up about 10 basis points, and oil was higher, with WTI settling up 1.5%, despite a larger than expected U.S. crude inventory build. S&P futures, as we get to the desk this morning, are up about 30 basis points, following through a bit on yesterday's rally, despite the late day sell-off. Asian equities were mixed overnight. European markets are mostly higher as well. Treasuries are slightly stronger this morning. The dollar is flat against the major crosses. Gold is down 50 basis points, and WTI crude is tacking on another 1.2% here this morning. So as we look at the S&P 500, you can see second day in a row above the 200-day moving average. Support now lies in the 2680 to 2720 zone, then down below 2600 to 2630. Resistance is in the 2800 to 2815 zone that incorporates these interim highs from October and November. RSI continues to turn higher. Chaikin money flow remains bullish, although it is diminishing here a bit. It's still up here near 12-month highs. So encouraging characteristics out of Chaikin money flow. A break of the 200-day moving average is encouraging. Obviously, still that 2800 to 2815 zone to contend with. But we're going to look at why I think that there's some volume characteristics that bolster near-term support zones. I think the plan of action is to use pullbacks in the S&P 500, such as what we saw last week, to key support levels, to then look for very bullish and bullish stocks that are in leading parts of the market, and then buying those stocks when they become oversold. That's the strategy we're going with here in the current market conditions. And should that change, obviously, we don't remain dogmatic in our view. When the facts change, we will change our minds. That's the key to surviving in this market environment as well as any other market environment. Be aware of the facts changing. Do not remain dogmatic in your views. Use these tools to manage risk and look for high probability opportunities to enter trades on both the bullish and bearish side of the coin. So your market in a minute. What am I talking about? In my note to Chaikin Analytics clients today, S&P 500 closes above the 200-day moving average for a second day, which may now serve as support bolstered by volume. We'll take a look at what that means. We do have a breakout in the percentage of S&P 500 stocks above their 200-day moving averages. Global markets pause at resistance. We'll take a look at that. And futures, as I said, do point to a higher open here today. Taking a look at our power bars now for the major market indices in the U.S. The Dow, 5 bullish or very bullish stocks, 6 bearish or very bearish stocks, unchanged from yesterday despite the 45 basis point advance. S&P 500 adds 30 basis points on the day, 120 bulls, 67 bears. NASDAQ continues to strengthen from a power bar perspective, although it was an underperformer yesterday. 29 bullish or very bullish stocks, 11 bearish or very bearish stocks. Small caps, inline performer, 532 bulls, 327 bears. That ratio now solidly positive after being the first to really go negative ahead of the market top. Remember, small caps started to underperform towards the back half of the summer last year. Bonds down tick. Energy had a nice day, outperforming, up 1.25% with that rally in the price of crude oil. But when we look at the power bars for energy, we can see 0 bullish stocks, 17 bearish or very bearish stocks. Bigger picture for the market. According to the power bar, small cap stocks and large cap stocks are somewhat bullish. Major indexes are mixed, and that's largely due to this negative ratio here, or this bearish ratio for the Dow Jones Industrial Average. Taking a look now at our stock of the day, SAIA Inc., transportation company, was an underperformer yesterday, closed at $67.85, down 13 basis points. Stock does have a very bullish Chaikin power gauge rating due to very strong earnings performance, very strong price volume activity, as well as positive expert activity. So as you know, when we take the 20 factors that fall into each of these 4 categories, they come out with a very bullish rating. So what do we have here? Very bullish stock, strong trend, but a weak industry group. Market and model not quite in agreement yet. So while the intensity of underperformance has been waning, really since the end of the year, we're not quite in outperforming territory just yet by our model. We are on the bullish rating, but the dynamic duo not in gear. Market and model not in agreement. Add to that the fact that we're closer to overbought than to oversold. As we round out of this oversold position, I'd like to see SAIA do a bit of consolidating here around the $65 level, work off this overbought condition, and then begin to outperform the market. That would get me more encouraged about this stock. I don't think you need to get involved in it now. As always, it's an interesting type of name. Perhaps you want to add it to a bullish watch list. It wouldn't be high conviction for me at this stage of the game, but it's certainly a name to consider and keep an eye on, especially if this relative performance continues to improve, because once the market and model get into agreement, then we know that this is the type of name we want to consider when the tactical indicators set up. We will notice that Chaikin money flow has turned bullish here. Sector tracker, the movement of the major sectors over the last 5 days. Industrials, we pointed out industrials earlier in the week as a group to watch, and they're now at the top of the list over the past 5 days, up over 2%. Still a bit of a defensive bent, though, with utilities and staples rounding out the top 3. Real estate also in the top 5. It's nice to see discretionary doing well from a risk standpoint or a sentiment standpoint, but I do think that trend is a bit counter trend in nature, the move that we're seeing there now. Comms, the only group to be down over the last 5 days. Energy, despite the rally yesterday, still near the bottom of the list. Healthcare is a group that we've been looking at from a relative strength basis because their relative strength has been waning of late. We do want to see technology move up the list here, and we're watching materials here, especially in light of the fact that the dollar is beginning to rise again. That should weigh on commodities, which should have a negative impact on the materials sector. Our industry in focus today is telecom services, which over the past 6 months has underperformed the S&P 500 by 3.73%. However, Power bar ratio, which measures future potential, is bullish. 14 bullish or very bullish stocks, 12 bearish or very bearish stocks. It is currently ranked number 15 of the 21 subsectors that we track, and it has moved down 4 slots over the past week. So for me, it's not a high conviction group to look at. Probably want to give it some more time. Some of the indicative very bullish names to consider in the group when the timing is right. EchoStar, that's SATS. We looked at that earlier this week and said we wanted to wait for an oversold condition, and that remains the case. Frontier Communications, FTR, and T-Mobile, TMUS. FTR has a very bullish rating. T-Mobile has a bullish rating in Chaikin Analytics, but T-Mobile is actually, of the 3, the one that looks most compelling to me in the here and now. So we have bullish stock, strong trend, strong industry group, fishing in the right pond. This is the type of name we want to consider. It's been outperforming since August and continues to outperform. Market and model are in agreement. We have a bullish stock that's outperforming the market. So dynamic duo in gear. So what's interesting to me here is that now for the second time, our indicator has failed to produce an oversold reading. So that tells me that this uptrend is strong. Despite the consolidation we're seeing here, the fact that this indicator cannot become oversold tells me that this uptrend is strong. Institutions are buying the stock, as we can see here with Chaikin money flow. Stock is above a rising long-term trend line. There's a few ways to play this now. Breakout traders can wait for a break above 70. That would be how you would trade this one if you were waiting for the breakout and wanted to get, make sure that this consolidation was in fact resolving to the upside. More aggressive traders can take advantage of the fact that overbought, oversold can't reach an oversold level and get involved with the stock now and then add to a position on a break of 70. And for those who are more conservative and may want to wait for an oversold condition, you can do just that. There's no one way to implement your trading strategy. It's a scenario analysis, a series of if-then statements. If you're a breakout trader, Your if is if we break above 70. If you're more aggressive, you can get involved now. And if you're a bit more conservative, you can wait for an oversold reading, assuming all else remains the same. Outperforming, bullish rating, the key strategy aspects that we look for. Trending names now, S&P 500 movers yesterday. On the gainer side of the board, FCX caught an upgrade, sends that stock up nearly 7%. Activision up nearly 7% following their earnings announcement. Hilton, HLT, up 6.8% following their earnings. IPG up a little less than 5% following their earnings announcement. And Global Payments, ticker symbol GPN, up 4.5% as they reported earnings yesterday. Dish was down 7.7% as their subscriber numbers disappointed investors. TRIP, TripAdvisor, their earnings report sent that stock down 5.7%. Cerner down 3.2% as their guidance disappointed the street. Ralph Lauren down 2.7%. No real company-specific news there. Same with Mohawk, down 2.61%. Didn't see anything in the news that might account for that move on the day in Mohawk. Earnings update, AIG missed by $1.10. PXD, Pioneer, missed by 22 cents. Equinix beats by 66 cents. There's that Hilton beat to send that stock higher. And Williams missed by 3 cents. Busy morning for earnings here. On the bullish side of the board, we're going to be looking at IQV. Neutrally rated stocks reporting this morning, Coca-Cola, VMC are some of the big names to look at. Also want to look at CME. BWA is a bearish stock. All eyes will be on 2 names after the close, however. AMAT is a bullish stock within the semiconductor equipment group, and NVIDIA is a bearish stock within the semiconductors group. Going to be watching both of those names closely. CBS as well, an important name to keep an eye on within the media space, and Arista Network, for you growth investors. ANET is a bearish stock reporting after the close today. Chaikin does suggest caution when holding bearish stocks ahead of earnings, but really all eyes are going to be on NVIDIA and AMAT after the close tonight. So let's look at what we're talking about here today. Near-term support bolstered by volume, and here's what I mean by that. A lot of people like to look at volume at the bottom of the screen, see what the volume traded on each day was. I like to view it as a histogram to show me at what price points did the most volume trade. Now, I realize this crowds the chart a little bit. I don't always feature it, but it's something I keep an eye on. What these bars tell you is where the most volume traded, at which prices over the past year has the most volume traded. And you can see last week we noted that the 200-day moving average was likely to serve as resistance bolstered by volume because a lot of volume had traded around that price level as well. S&P 500 promptly faded to the top end of our support zone before resuming higher. Now we've broken through that 200-day moving average, and now these volume characteristics could potentially act to bolster the support areas that we've been talking about now. So we're looking at around the 2630 area as the top end of support, and that's bolstered by volume. It's a great tool that you can use to see where the most volume traded, because if you think psychologically, that's the price level where most people got involved. So it makes sense that those would bolster important support and resistance levels. Again, it crowds the chart, so we don't always feature it, but it is something to keep an eye on and could potentially act as support now. So we had resistance, breakout. When resistance is broken, it could become support, and that becomes bolstered by volume. Breakout in the percentage of stocks above their 200-day moving averages is encouraging from a long-term breadth perspective here. Percent of stocks above their 200-day moving average has moved above those interim highs from October, November, and December, which to me increases the odds that the S&P 500 will do the same. Is it guaranteed? Absolutely not. Nothing is guaranteed. But when we're looking at the odds of an event happening, this breakout in breadth increases the odds that the index will do the same. And that's the key level that we're looking at right now to the upside. Finally, we had a pause in the global markets. The ACWX, the ACWI ex-US ETF, kind of got up here near the declining 200-day moving average, cluster of resistance, and it's beginning to pause here. Momentum is still encouraging, but I will say is we do have a slight breakdown in its relative performance, so that's something to keep an eye on for those of you who look at global markets. That's going to wrap it up for today. I'll see you back here tomorrow. Have a great Thursday, everyone.